morning, everybody. Happy Friday. This is the morning show on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza is back in the saddle today. What's going on in markets? Anything of note happen overnight? We got some Adobe earnings and a new CEO. While we're at it, we'll talk about that. It's Crypto Friday. We'll have Louis Sykes on the show. We will have Sam Rowe on the show. It's been too long. It's been too long since we've had everyone on the show, but Sam Rowe will be joining us today at 9 o'clock. One of my favorite market writers, commentators. Very excited to talk to Sam as always. We'll have Kenny Glick stop by, and we have everyone here in the chat. We got Jason Wong. We got Phil Yosel trading on it. Dan Yo. What's up, guys? Are we live? Are we good? Everyone's here? Capiche? Yes? Great. Drop me a like. Let's dance.
Oh, man, this week has flown by.
Yeah, it was a quick one. Fast market.
I was reminiscing this morning, Mr. Strazza.
About me?
Nope.
About when banks used to be good?
Nope.
Oh.
I was thinking about how the first quarter's almost done. After today, we're halfway done with March. And so Q1, like, pretty much done, you know, and I was thinking, like, how do I feel? Like, have I been exercising and eating well? Have I blown up my brokerage account? Like, you know, how are things so far in 2026, right?
Yeah.
I don't know what kind of came over me, and I was just kind of staring out into the woods and just being like, you know, so far so good. So far so good. Doing okay.
Well,
so far. How about you guys? You guys doing all right
well,
so far this year?
Were you going off of your own feelings or like data? Because we know how feelings can betray us, right?
You know, I'm data driven.
Yeah.
I'm data driven. You know, health wise, like, you know, like Phil's always saying, like, you know, how do you feel? Like, that's the true test. Like, how do you feel?
That's true.
There's no way to quantify that. You know,
Yeah,
market wise, portfolio wise, then you can quantify that, right? So some things, the data comes from different places, but you know, I'm feeling pretty good.
Good.
I got a tan. Man, I was white there for a while, bro. Go check the tape.
You look great. I'll give you that. Okay. If that's a data point at all, I saw this man Sunday night. Looks fantastic. Especially with a little color. He had like a scruff thing going, like a little vacation beard. What was that, like 5 days in?
That was at least, that was 7 or 8 at least.
Wow.
Yeah.
Should have kept it. That's just my opinion. Yeah.
Morgan hates it. You need to shave. You have so many white hairs. That's what she says. And then my grandmother hates it because she says it reminds her of Fidel Castro.
I can't believe that.
Oh, God.
True story.
Yeah.
True story.
You can't do that to grandma. You can't do that to grandma.
She hates it. She hates
That's
it.
a deal breaker.
Dude, she's 96 years old. She's still like complaining about Fidel Castro. They left 50-something years ago. Swear to God.
No, that is something.
Hey, where does one get a BitMine visor? Is that from Future Proof?
So I usually do the whole swag bag thing because I like to, you know, a little booth banter, right? Make my way around. Say hi to some folks at the booths. Too hot this year. Too hot. I got to like 2 booths. One of them was BitMine, and I got there and I said, "Who was responsible for this highlighter colored visor?" Because I like to wear my stuff on the golf course, and I can't wear this in public.
Dude, Strazza gets one of the bags from one of the booths because some of the booths give away bags. So he gets a couple bags and he starts walking around shopping.
Yeah.
He's getting everything. He's just low. This guy has so much swag. I can't even.
That's the only way to do it as far as I'm concerned.
I did that once and I came back with all sorts of stuff for the kids. Morgan threw it all away.
Right.
He goes, we don't need more shit.
Mine goes in the corner of my office and I'll wear some of it. But like in past years, we've got some cool stuff like the Hoden hat.
That's good.
This thing is ridiculous. Who's wearing this color anywhere? But oh well. So I went home and I bought more calls. Yeah,
I love it.
crypto.
That's great.
No?
What do you say? What do you say? Shall we? Shall we dance? Do a little dance, little Friday crypto Friday dance.
Yeah.
All right, folks, we've got the Dow Jones Industrial Average, the world's most important stock market index, up 163 points this morning, 46,883. So we're over 3,000 points away from Dow 50,000. How far we've come. The S&P's up 1/3% this morning, 6,700. That's 300 points below 7,000, down up 1/3%. NASDAQ 100 also up 1/3%. That's 75 handles on the futures. 24,634 for the NASDAQ 100 futures. 30-year bond futures flat at 104 and change on the ZB. Crude oil down 1.5%, 94 and change. You got copper down 1%, 580. Got gold flat at 51.20. Silver down 1%, 84 and change. And the VIX still at 26. So pricing in over a 1.5% move for the S&P 500 per day. That would just be normal. That's what the VIX at 26 means to me. And Bitcoin. And by the way, that's also what it means to Jason Shapiro. So I'm not the only one. So I like asking questions on things that I feel, work for me. And I want to see how others think about that. And, sometimes they disagree, which is great because I learned something new. Sometimes they agree. And I feel like, unfortunately, Jason Shapiro totally agreed with me. He's like, the way you use the VIX is the way I use it. I'm like, that's all you got? He's like, that's all I got. I'm like, all right. So we're still in the same boat. So that was funny yesterday. Bitcoin over in funny money land, up 2.6%, 72,400 for BTC. Wow, really stuck that, man. Very impressive. Ethereum 2130, up almost 3% on the day. Solana back above 90, up 4% on the day. And the total crypto market cap, Mr. Spencer Israel, up a cool 100 milli. 2.44 trillion.
All right.
It's another 100 million amongst friends, huh?
I bought more Solana last night. I bought some of the Sui. I really like clean base. I didn't buy more Ethereum because I have way too much Biminer calls already. And I bought some Hyperliquid.
Let me tell you something. I can't remember a time where Steve Strazza has been this bullish of speculative growth and, software, crypto. I haven't seen this man, and it's not like he hasn't been bullish this stuff before. Most definitely has. And bearish too, for that matter. But man, oh man, boy, are you excited about this market, Mr. Strazza? Chat, can I get a witness? Or you guys agree with me? When was the last time this guy was so giddy about the old crypto? By the way, to his credit, he's been right. And, I'm in too, so I'm not complaining about it. But in terms of excitement, man, you are excited, brother.
I am aware that I have a bias towards this theme because these are some of the best stocks or groups of stocks for trading, even if you're trading counter trend. But I think we're getting real primary trend reversal out here. You still need to see more. But the fact that this is happening, right, with financials breaking down, small caps getting hit, everything that's going on with equities, and you look at cryptos, we're looking at new 1 to 2 month highs, depending at, what token you're looking at. And they're really nice bases for now. And they're not resolving lower. They're resolving higher. In fact, most of these bottomed the first week of February. So you've had a month of base building, maybe not the longest time, but we've seen shorter term bases than this. So for now, I think you got to ride it higher. You got some really clean levels, the base breakout levels in these things. That's it.
What do we throw up slide 2 there? So this continues to stand out. We've been talking about this since January. It's that cluster of Fibonacci extension levels, all at these same levels, right? So if these cryptos are going to go, if software is going to go, would you agree, Strazza, that large cap tech is going to go too?
Yeah,
right?
I think you have a clear line in the sand in XLK, MAGs too, like other indexes too. But you can keep it simple with XLK, right? You can see that shelf of pivot lows like 135. As long as we're above there, I think we go fail toppy eventually. We're off to the races. You could use a trigger level, just dropping the VWAP at the range highs here, which would be
are they gonna rip them to new all-time highs here?
Yeah, I think so. I think you get a big move. I think you're getting a bit of a beach ball effect like in this space right now. Like these things want to go. Holding up better than anything. Large cap tech, large cap growth.
Spencer, anybody ever tells you Fibonacci, Liberace, you show them this chart. Be like, yeah, this is just a coincidence, right?
Well, you could use
like
this
that.
for a trigger level too, right? You could monitor some sort of failed top situation and then use these fibs as a trigger entry level, no?
I mean, for me, what this means is this would be a logical level for some digestion at the very least, or a massive correction, right? Fine.
Had it.
I think that, yeah, sure. This is going on since October. It's 5 months in already. So,
Right.
I think a breakout, just zooming out, a breakout above those levels is incredibly significant for this market. Gets you to 8,200, by the way.
Yeah, and like you said, bullish for everything.
Yeah,
right.
Fibonacci, my new Italian series. I mean, sometimes the chat is just on fire. Today's one of those days, no doubt about it. Why are we burying the lead? Slide 5, please, guys. Hello. What are we even doing here? What are we even doing here?
What is it?
It's like, you can't even make this shit up, man. How long have we been doing this? Come on. Give it to him. Burying the lead. You knew it was coming.
This is not
chart on.
It's coming. It's coming. Sheesh.
What?
So, I mean, the way I learned it is that if there's a chart on the cover, you got to buy stocks. That's how I learned it.
Yeah, I like it.
It's always been that way. The market has continued to prove that. And as someone that we can all agree here, I look at a lot of charts and I can tell you what is a chart and what is not a chart. It's like porn. You know it when you see it, right?
When missiles fly, it's time to buy. Who was that, JC? Was that Art Cashin? Do you know?
What did he say? You buy the cannons and you sell the trumpets.
Yes, you're right. You're right.
Buy the cannons and you sell the trumpets. Somebody look it up. I'm pretty sure. Yeah. So hold on. So throw up some covers with some charts in the past, so you guys can just kind of see, this whole theme of buy stocks when there's a chart on the cover. This goes back a long time, my friends. Look at that one, Alan Greenspan in the lower left.
I was gonna say.
Shout out to Alan. Dude, how about the bear with the sunglasses and the charts on the shades? That's a good one. Come on.
Yeah, that's great. When was that?
That was 98, right before the market ripped. And then throw up, you see the one where the chart is falling out of the bottom of Earth?
No.
Right?
Oh, yeah, the New Yorker.
Nice. New Yorker there. That was great. So that was after the tech bubble peaked. The S&P's bottomed a week later.
Right.
Really?
Yeah. I mean, all of these buying opportunities, by the way, in case you...
Wow.
Is the boom over? That Time magazine, is the boom over? No, actually, it was just getting started. 99, that was 98. 99 was one of the greatest years ever. The Great Reckoning down below, they used a bar chart on that one. That was creative. And the Great Reckoning that was a great time to be buying stocks after COVID.
Okay, so
Alan Greenspan?
Yeah, Alan Greenspan.
And who's the crazy guy in the bottom right?
I don't think that's anybody.
Oh my God.
Is that somebody? I don't know. I don't think that's anybody. I think that's just a rando.
Weird.
Here, throw up some of the ones so you can see the returns after the charts. This goes back a long time. This goes back to 1965, right? Great buying opportunity there, chart there. Great time to be buying stocks, right? Just classic.
Yes, so they're all backward looking, right? So they're all talking about what already happened.
Right, that's the whole point. By the time the chart comes on, right? Go look at the, sometimes it's a continuation. Look at that SNL crisis chart, the next one. So that was the savings and loan crisis, right? Yes. And then look what happened after that. There was no crisis. It's all good.
It was all good.
It was all good.
It wasn't good for everyone.
And of course, the one from November, don't forget that. We all debated whether this was a chart or not. I think we all agreed it was, in fact, a chart. And then, of course, stocks ripped after that. So I don't know anything, man. I don't know what the market's going to do. I don't know anything. All I know is the way I learned it, what is that? If there's a chart on the cover, you buy stocks. Market keeps proving that that's a good idea. There's a chart on the cover yesterday. We'll see what happens. That's it.
All right.
No, I like it. I'm with it. I think we're so close. Yesterday was not a good development, is the truth. There were some tactical levels, like we talked about that 675 on the S&P that finally went. yesterday, but looks like, you know, they're going to buy him back here this morning. It has been just such a chop fest. You need 2 green candles to kick this thing off. I was talking about this yesterday. Haven't seen that yet. So maybe we get that today and Monday, and then we come out of this thing, drop some VWAPs from the range highs. I think that'll be pretty good confirmation.
We got Louis Sykes in the house. Very much looking forward to talking to Louis Sykes. Crypto Friday. Happy Crypto Friday, everybody. Strazza with his HODL hat on. Very, very well done. Very festive today on Crypto Friday.
And for Solana, that level's like 90. I hope Louis brought some of these bases. Yeah, I wish. Maybe I'll go make some charts, some crypto charts.
I like it. Bring out Mr. Louis. Bring him out.
Oh, all right.
Louis.
Give me a second.
Got my fingers on the post, avocado and toast, leather seats, jet plane, always ready to go.
Lou Dog.
Morning, guys. How's it going?
Fantastic, sir. Happy Crypto Friday. Is it, what day is it? Sunday already over there in New Zealand? What day is it over there?
Not quite. We are time travelers. We are in the future, but it's not quite Sunday yet. It's just Saturday morning, 2 in the morning here.
Damn.
Wait, you guys do or you do not do daylight savings?
We do daylight savings, but that's going to be in a few weeks' time. We do it a few weeks after you guys.
Dude, it's so confusing. You don't even do it at the same time. That sucks.
I know. And then the financial year, the financial year is completely different to you guys. I know it's just out of whack for a humble New Zealander working for an American company. It's disorienting sometimes.
I like that one time you wrote the blog post about Thanksgiving, but it was the 4th of July.
Goodness gracious.
I'm like, Louis, we don't eat turkey on the 4th of July.
I developed this beautiful blog post talking about how we need to give thanks. And then the next morning I realized, shit, it's not Thanksgiving, it's Independence Day. Let's
okay.
So I'm not going to make that mistake again.
We can
Louis,
give
we
thanks.
love you so much for
we
it.
can give
we
thanks
love you
on
so
July
much
4th.
you don't even know.
It's fine.
All right, so Strazza pounding the table, crypto's digging in, and sure enough, they have, right? What the fuck? I still can't buy this Canton on Coinbase. Is the
don't read those messages.
That's a private message, JC.
That was a private message.
Yeah, I know, but it's funny, and he's right.
It's because Coinbase, like their competitor, is that?
No,
the
yeah.
situation?
Tell me what the communism situation is here. That you have to use the fact that Americans have to use a TradFi vehicle in which to express a bullish thesis on Canton rather than just buying on the goddamn blockchain like a normal crypto, degen, right? Like, what is happening here?
Why?
Well, here's the thing with these Canton guys. They don't have any VC allocations to the cryptocurrencies. What happens with all of these cryptocurrencies is venture capital firms and funds will invest in the cryptocurrency, and then they need a way to get liquid, so they launch it with a big exchange like Binance or Coinbase, and the moment it gets to those markets, they sell the shit out of it, and then it puts in this peak. Canton doesn't really have that, so they kind of stealth-launch this thing, and they're just gradually adding exchanges as they go because there's no VC allocation for people to dump on retail.
Good for them. So they're some of the good guys.
Yeah, I think so.
And then so Coinbase just blacklisted them. They're like, no.
Well, I think it'll come. I think it'll come with time.
Just because at the end of the day, if there's liquidity there and Coinbase makes money off of that.
Yeah, exactly. I mean, Coinbase, great company. I was going down the list of all the top cryptocurrencies by market cap, and I was just going on CoinMarketCap on the website, and you go down these things, and all of these cryptocurrencies that are in supposedly the largest cryptocurrencies of the asset class are just abysmal. You've got stuff like Dogecoin is the 9th largest cryptocurrency. You got stuff like Bitcoin Cash. Nobody uses Bitcoin Cash. Nobody has used Bitcoin Cash. Nobody who matters has used this thing since 2017. You got Leo, which is this random cryptocurrency that nobody uses. You got Cardano, which generates I'm not kidding, $300 in revenue every single day, and it's the 10th largest cryptocurrency in the world. $300 a single day of revenue, and it's valued at $12 billion.
Who's got
and yet
the
it's the
Boku
10th
Dolores
largest
today?
cryptocurrency in the world. And it's no wonder people don't take crypto seriously. So when you go have a look at this market cap ladder of crypto, it's not a demonstration of the best and strongest investments in the space. It is a fossil record. And you need to know that.
This is a hot take. I love this take.
Wow, Louis Sykes coming in hot on Crypto Friday. 2 in
it's
the
the
morning
reason-
in New Zealand.
This is the brokers did this, Binance, Coinbase, because people buy the big names that are listed on the big, brokers and exchanges. Is it as simple as that? Like, why are these market caps, the stuff you're naming, still so large?
Yeah, I think it's a case of, and over the last few years, again, coming back to this whole venture capital story, you had a lot of these crypto technologies, they were pitching their ideas to funds and venture capitalists, and they said, hey, look, I've got a blockchain, it's disruptive, here's my slide deck, and then they walked out with a deal and a few $1 million, and they launched a cryptocurrency. And that's all that really needed to happen because money and fundraising was so loose back then. And so now we've got this situation where we've got all of these blockchains that nobody really uses, and the point of differentiation between them is just marginal. And now the market is finally cottoning on to the fact that these things don't even matter. The fact that this is the 10th largest cryptocurrency in the entire market, and it generates $300 in revenue every single day. Like, I could start a food truck that launches that sells pretty average food, and I could dump it in a really bad neighborhood, and I would make more money than this cryptocurrency that's valued at $12 billion on a fully diluted basis. And it's no wonder people don't take the market seriously. And so it's as simple as just looking at what are the networks, what are the technologies that are really generating revenue, and how are they mispriced. And so I keep coming back to Canton, right? So Canton is at about $6 billion in market cap. Cardano, on a fully diluted basis, is about twice that size. But yet one generates $300 of revenue every single day. The other one generates $3 million. Like, how is that? It just doesn't add up at all.
I mean, so short Cardano or wonder why it's being held up so much.
No, just sell the Cardano that you forgot about in your Binance account from 10 years ago.
The guy that created Cardano has gone off and he's created a new blockchain network, and he's completely left Cardano. He's completely forgotten about it. And so the people that...
What's that guy's name?
Yeah,
I don't even know.
He was on when they didn't include him in the Trump thing.
I think he felt left out. Like, he didn't go to prison, he didn't go public, you know what I mean? Like,
Right.
he's not like in the cool. I feel like he's a little bit left out. Maybe we should invite him on the show. Make him feel welcome. You know what I mean? Like, I think he just maybe needs a hug.
Some of these food trucks make a lot more than $300 a day. Some of these food trucks absolutely clean up. They got low overhead. Like, it's a great way to start. You know what I mean? If you got a concept, something you think is good, why pay the rent? Just get the food truck, kind of start there.
Charles Hoskins, that's his name. Get him on the show.
Strazza,
Charles, if you're listening out there, you got friends over here. Come on in, tell us the story. We want to hear it. Invite it on the morning show. By the way, the best food trucks are the ones in Miami where they're like food little boats, and they sell like croquetas and like pastelitos and empanadas and stuff like that. Like, those are the best food trucks, the ones on a boat. And they just kind of cruise around because they go to the sandbars where there's just drunk people everywhere. They're going to pay whatever for those croquetas.
Boat eats. Yeah.
Eats.
Sure.
You get crazy munchies on the boat.
Uh-huh.
Louis, you go on the boat much? You got a lot of water around you out in New Zealand.
Are you a boat guy?
I know. I just went down to Stewart Island. It's New Zealand's furthest down island. There is literally, I went on a plane ride to get to this island, a population of about 300 people. It's the closest thing to Antarctica in New Zealand, the furthest place down south, and I went snorkeling there. And when I went snorkeling, I only realized that this particular island has the greatest density of great white sharks in the world. So I was absolutely bricking it as I went into the water. Thankfully, I didn't see a great white.
What were you doing? You were bricking it? Can you explain what that means?
That's crazy, though.
What does one do when one bricks something?
Is that not an American term?
No, you'll have to explain it, but I'm curious. What does bricking something mean in the water?
Well, just excuse my language. It just means that I was shitting myself out of fear, knowing that there was a lot of great white sharks swimming around.
Shitting bricks. Got it. Understood.
I have to question your risk management getting in those waters.
I mean, look, I did the analysis, I did the research, and I could have made an emotional decision to not get in the water, to not have a great time snorkeling with the fishes and the corals.
Good for you.
But I did the research, and the probabilities, the risk versus reward was in my favor.
Is the snorkeling just unreal there? I love snorkeling.
Oh man, it was so good. It's in this marine reserve. It's this ocean sanctuary.
Wow.
I was almost crying a little bit as I went for a walk around this island because all these birds are flying around and the fish, and it's just beautiful. I had a little bit of a moment there.
That's lovely. That's great. Good for you, dude. Sounds fantastic. I would love to get some New Zealand snorkeling in my life.
We're gonna do a portfolio accelerator in New Zealand.
No, we're not.
Yeah, we are. And then we're going to go down and drink Pinot Noir down in the South Island. I'm going to give you guys a wine tour of New Zealand. I'm going to give Louis a New Zealand wine tour. How about that?
You go for the wine.
Great. Hey, I'm in the process of moving my house. I'm heading off to Nelson, which is next to the Marlborough Sounds, and that's a really key wine area of New Zealand. And so I'm going to hit up you, JC, for some recommendations. I've started drinking a little bit of wine, believe it or not.
100%.
I'm trying to mature the taste buds a little bit. I'm
You're
growing up,
fancy.
this young lad drinking wine.
Dude, New Zealand makes great wine. Pinot Noir, Sauvignon Blanc. Excellent job. And by the way, don't sleep on the Chardonnay. Nice little Chard from New Zealand. I'm telling you. But the Pinot Noir is off the charts. I mean, that's what they're known for.
I'm going to hit you up with some recommendations.
South Island Pinot Noir, New Zealand. Get it done. Louis, one more chart for you. What's going on here? Slide 2 here. We're looking at... So you guys pull it up. One last chart. No chart? There it is.
Whew.
Big failure there, Louis. What's going on, man? We got to get going.
Goodness gracious. Well, here I am, JC, at my desk every single day on weekends, working 12-hour days in front of my computer screen. I'm trying to get this chart to break out. I'm trying to pay my taxes. I'm trying to get this chart to break out. I'm doing the best that I can, JC.
Get it going.
I'm doing the best that I can.
Dude, I was hoping for a breakout in New Zealand. It just failed miserably. Tough break there. Tough break. I'm keeping a close eye on it because, I mean, this is, whether you're going to trade New Zealand stocks or not, which we are definitely not because there are 0.0 ADRs in America from New Zealand. But just from a bigger macro perspective, failing at those 21 highs, not a good look.
When I look at this, I see the Russell 2000.
You couldn't agree more.
Right?
Emerging markets also.
Let it dance. Give it time.
Looks like small caps. You're not wrong.
We have a problem in New Zealand where, we as a country, we just sell beef and wool and tourism, and that's all great and all. But then I come over to America and you guys are literally building nuclear power plants to power artificial intelligence data centers. And I go back to New Zealand and I just think, what the hell are we doing as a country? We need to follow what you guys are doing over there. We just need to stop selling wool. We need to actually get our big boy pants on and actually try to get these charts to break out.
Love it.
Louis Sykes, thank you so much. Get some rest, buddy. It's 2 a.m. over there, huh? Give it a break. Give the charts a break for a few hours. Get a rest.
Safe travels.
Thanks, man. Appreciate it.
And enjoy the ride, Louis.
Yeah, say what's up.
Have a good weekend, guys.
Later.
Louis Sykes.
Cool, man.
Sykes.
Living it up. Drinking wine. You love to hear that.
I want him to drink the wine.
Yeah.
He lives in New Zealand.
Right, he should. Yeah. Good.
Sounds like he is.
That'd be like living in Manhattan, not eating the pizza or the bagels.
I had Prince Street pizza, and it checked out.
Yeah, huh?
Yeah, pretty much.
Okay.
Pretty much.
Good to
But
hear.
I got a full pie, and I love the hot honey pepperoni. It's a lot for
It's a lot.
Pie. For the full, you know what I mean? Give me a slice of it. Great. So I
agree more.
I goofed up there a little bit.
It's aggressive. It's an aggressive move. A little too aggressive for me. Speaking of which, we are incredibly fortunate to have Mr. Sam Rowe in the house today.
Nice.
Keen market observer and extraordinaire. Also, quite the foodie, New York City foodie. He also makes
I think also at Future Proof, Strazza. I think he was at Future Proof too.
I didn't see him. I didn't see him. Yeah, one of the best in the business. He was probably there for sure.
Do it.
Big event. All right, Sam, ready? Bringing you out regardless, ready or not. Here he comes. He says he didn't Steve either. He didn't see Steve either. Yeah, that's how it goes.
That's all right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Sam Rowe, how are you, sir?
What's up, man?
Listen, guys, if you don't know Sam Rowe, I don't know where you've been. Sam Rowe, OG, a true OG. You know, there are guys out there that, you know, there's a lot of newcomers and stuff like that, and there are guys that have been there since day one, right? You're in that category.
Yeah, we've been doing this for a little while, haven't we? But you know, if you can make a living off of this, is there anything better to be doing right now?
I know. We used to do it at happy hours in Soho, if you recall.
Yeah. Back in the day, we were much younger back then, right? But yeah, those were the good old days.
Yeah, but you and I both look better. We look better today than we did then, though.
I agree. We look a lot happier. We're smarter.
Yeah.
We're obviously wiser.
Yeah.
You know, we've survived a lot of you know, market cycles and economic cycles. So good for us.
Aging well like a fine wine, sir. Let me ask you this. How old are you?
42. No, 43. 43.
You're 43, so you're younger than me. I'm February 82, so I just turned 44. So
you look great, man.
Thank you. So we're basically the same age. So we went through the great financial crisis at a similar point in our careers, and every cycle after that. So we're kind of like on the same, you know, mentality in terms of our experiences. How did you get into the market originally, though? I don't know. I don't think I know that story.
Oh yeah, you know, it was actually sort of an accident. You know,
usually
just real
is.
quick. Yeah. So, you know, in college, believe it or not, I had no plan and I had no sense of looking further out than.
Where'd you go to school?
You know, the next semester. I went to the BU. I went to Boston University.
Yeah.
I graduated with a degree in religion. And in the last semester of that year, I suddenly realized I needed to look for work. And as people in humanities and social sciences often do, they're like, oh, well, you know, you should probably go and, you know, look into law school. But it was already kind of late. So at that point, the advice was, you know, see if you can get a job, you know, at a law firm, you know, back office, do some paralegal work, get some exposure. And, you know, I reached out to a couple of headhunters and I ended up at a firm in Midtown. I think it's a lot more well-known these days. This firm, Paul Weiss. And I was hired on as a contractor to do some paralegal work where, you know, without getting into a lot of detail, I learned a whole lot about equity research from scratch. From knowing nothing about finance or the stock market to understanding how people were deriving stock prices using models.
Because your first project was in that world?
My first project was in that world. So they were representing they were representing a firm that was being sued by clients for their coverage of industries like energy and telecom during the late 90s. So I got to see, you know, a little bit about how some of these analysts were putting together these reports. And it was just so fascinating to me because, you know, from a distance, I always thought that this was just all like, you know, it was like, you know, nuclear physics, right? You have to know all this math and you have to know all this law. But it turns out that, you know, you get a little bit of information about, you know, how industry trends look, and then you eyeball it and you put it into a spreadsheet and you eyeball that a little bit more. And then if the price target that you derive is, you know, way out of line relative to, you know, what the current market price is, then you massage it a little bit. Now, this was my interpretation, to be clear. This is not something that was explicitly necessarily something I saw in those legal documents. But long story short, I thought it was fascinating because it was a combination of a little bit of math, which I was always interested in. But importantly, there was this huge human factor, not just from the analyst side, but the fact that they have to think about how consumers and businesses make decisions. And it happens to be the case that people don't always make decisions based off of, all the rational choices in front of them. A lot of people operate off of emotion.
Humans don't make rational decisions in times of stress, Sam?
It's funny. I think one of the most important quotes I remember around that time was I saw Robert Schiller giving a TV interview, and I thought this was so insightful. This changed my life, and it's kind of obvious. But he reminded people, economics is not a hard science. Economics is a social science, and that really spoke to me. And the more I read about economics, the more I realized it's actually very similar to how religion operates. And so, fast forwarding a little bit.
Hold on. You're working at your law firm in your early 23, 24?
This was 2000. This was in 2005 to 2006. And then I got a couple of random jobs, and then I ended up at Forbes in their investment newsletter business. I think some of y'all in the newsletter world, might have remembered some of their, they had a huge stock picking newsletter operation. Like they had dozens of licensed newsletters. But
that's when you started showing up at the happy hours.
That's when I started showing up at the happy hours. Through that, I got to meet a whole lot of really interesting, Wall Streeters. Like, with the Forbes brand, you're meeting old school Wall Streeters.
Right.
I think, no one's going to know this reference. Maybe you will. But one of the most important people I ever met through that experience was Bob Stovall.
Yeah.
So a lot of people these days might be familiar with Sam Stovall.
Yeah.
Sam Stovall is Bob Stovall's son.
Yeah.
Bob was raised in Kentucky, which is where I grew up, and that's where we started to sort of, our conversation started that way, and then he helped me get introduced into this world of finance. And yeah, I learned about stock picking. I worked with a really great team at Forbes. I got my CFA charter while I was there.
So this was during the Great Financial Crisis or just before?
Yeah, that's 2006 to 2010. So, which was actually the perfect time to be, studying for the CFA because, I'm an equities guy, but a third of that curriculum is fixed income and derivatives. And none of that stuff made sense when I was reading it in the textbooks. And I actually failed one of the levels the first time. And then while I'm restudying for it again, everything in the news turns into mortgage-backed securities, CDOs, interest rates, monetary policy, all this stuff that's always been part of the curriculum that never made any sense to me. But now it's in the news. So now I have real world examples to work off of for this curriculum. But yeah, I did the CFA during that period. And then of course I got mixed up with the great financial crisis. Everybody else got laid off in 2010. And then in 2011, I managed to find a job at a small shop in media called Business Insider. And that really also opened my doors in terms of networking with folks like you and Josh and all of the early bloggers.
Remember the early blogosphere? Remember the traditional media hated us, and I shouldn't put me in that category because I was by no means a big blogger. I did have a blog, but they weren't talking about me. But the media was hating on these bloggers. Remember?
It was a different time, especially since a lot of what the bloggers were doing and a lot of what the new digital operations were doing were aggregating from the traditional media.
Yeah.
But here's the thing: it was a love-hate relationship that very quickly turned into love, because a lot of the traditional media realized that they couldn't figure out how to get traffic in the digital world, whereas the blogs of all places were getting traffic. And it happened to be the case that places like Business Insider and the blogs and all the digital players, while aggregating, we're also giving these people credit, saying, the Wall Street Journal had this really cool article, and here's a really interesting stat, buried down here, and all these little anecdotes. And the digital players were so much better at getting traction in things like Google search and social media, and just how to use the multiplier effects of those digital mediums. And then before you know it, their media relations and PR people are sending stories to us. and say, hey, you should look at this and think about writing about this. So yeah, you're right. It's like on the surface, there's a lot of disdain because all the displacement and stealing of audiences coming from these upstarts. But it happened to be the case that we were some of the best referrers of traffic to the traditional players. And because at the end of the day, we're all in this together.
How come we don't call them blogs anymore, Sam?
That's a good question. I think it's it's kind of antiquated. And it's kind of like, why don't we call, digital media platforms newspapers anymore? I think the big difference right now is everyone's attached a newsletter component to their blog operation. So it's how, everything seems more like a newsletter than it does a blog. And I guess from a marketing and business standpoint, it sounds better if you're a newsletter because that means you have a captive audience, right? I mean, we can go into the details of that all you want.
I'm just always curious because blog was only like a cool word for like a few years because like it had like a negative connotation, like almost like, oh, you're a blogger, like, right? Like,
yeah.
And then
I mean,
it was cool for like a minute and then it just went away and now nobody even uses the word anymore. So what was the coolest part of blog? Maybe 2019, 2020 was like the coolest time?
No. The best times to be in the blogging world, I think, was probably from especially financial blogs, from like 2006 up to maybe 2011.
Of course, right? But it had a negative connotation at the time. I agree, that was the best time.
Yeah, to steal a word from you, JC, negative connotation, relatively speaking, right? Because the traditional players absolutely hate it because you're stealing traffic. But the only reason you're stealing traffic is because there's someone who loves you. There's a positive connotation toward blogs.
I'm glad you're mentioning
we're
this.
Getting information from news.
I'm so happy that you mentioned this because back in the day, the community, sort of the way you behave in the community is by giving love. Hey, Sam Rowe, great blog post, go check it out here. JC, great blog post, go check it out here. There was a lot of love. There was a lot of sharing, right? Ultimately, it turned into, I'm the best, you suck, your politics are wrong. Like that, it wasn't like that back in the day.
It was not. There were hints of that, and there were hints of that energy because here's what happens. When you do things like go out and do hate and like blast people and criticize people for the one wrong call they got, even though they might have had 9 great calls, then you might be able to get attention to that one tweet or that one blog post or whatever. And, it creates a feedback loop. It's like, wait a second, this, the love posts weren't giving me as much, of the traction in that day's conversation as the hate was. And this is, by the way, this is actually something that happened, in early digital media too, right? Like the difference between having good digital bloggy content that made readers feel smarter and better, very quickly, starts leaning into clickbait and hyperbolic headlines where you're saying all kinds of outrageous shit. And then, it doesn't really deliver in the story. And then eventually those relationships with their readers break down. But yeah, I agree. The vibe was certainly much more positive back then. Yeah. I don't know why. I mean, algorithms definitely have a big role here. Everyone knows, especially in social media, if you want to get attention, if you want to get all the impressions, the negative stuff tends to get amplified.
Yeah, but also it was a much more niche corner of the internet back in the day, and now everybody's on it. So now, right? So there's a little bit element of that also, I think. Let me ask you something. As somebody who's, we came up at the same time doing the same things. CFA fundamental guy over here, technical guy over here, but it doesn't matter, right? We're still doing the same things every day. Here we are, 2026. What is your consumption, your media consumption look like? When it comes to the books that you read, the traditional media that you read, what you watch. I'd love to hear, your social experiences. What do you use? What do you don't use?
Yeah, that's a good question. I mean, I think, well, here's one of the biggest things I think has changed for me. So I still am on Twitter all day long, unfortunately, for better or worse.
You do the thing where you got the multiple streams. What's that called?
Yeah, it used to be called TweetDeck, but now it's called
TweetDeck.
X Pro.
Got it.
And I think the biggest change that I've made in the last maybe 5 years is I've taken all of the mainstream news and put it into a column that's not even visible on my screen anymore. Because something I've learned, a couple of years ago, if there's something happening in mainstream news that matters, especially in the context of financial markets, it's going to make it into financial.
100%. 100%. You want to know something, Sam? Back in the day when Josh was still on Twitter, right? Like if I was like in a meeting for hours or whatever, I was kind of MIA or in the air flying or whatever, and I just wanted a quick catch up. You could bet your ass that Weisenthal was tweeting about it and Josh was making fun of it, right? You could bet, right? 100%. And that was enough for me to catch up. And then Josh quit Twitter one day and then whatever. But you know what I mean? Like if it's good enough or if it's funny enough, right? Like if something happens on one of these news networks that's hilarious, like the baby crawling out of the back during COVID, right? Remember that one?
Yeah. For the North Korean scholar. Yeah.
Pulling her out.
Yeah.
Classic. That's going to make it on Twitter, right? There's a Drunken Miller interview where he's like talking, he's the man. He's like, it's going to be on Twitter, right?
And that speaks to a couple things, but I think there's two important things about what you just said that I think is really important that sometimes gets underappreciated. One, curation is such an incredibly valuable part of like the sort of media value chain, right? Like people like Josh or Joe or they're not breaking news every day. If anything, they're breaking very little news, but they consume a lot of it. And then they make conscious decisions about what to advance out there. So it's like, it might not be the case that you have to follow, Fox or MSNBC or whatever it is that, you tend to lean toward. It might be the case that if you have really good people that you trust, then they will be able to, resurface those good stories into your feeds and your streams. So yeah, to your point, it's like, depending on how much time you have, you can read an entire newspaper if you so desire. If you have 30 seconds, then yeah, maybe scroll through, Weisenthal's, Twitter feed for the last, 6 hours, and you'll get everything you need. And that's also a big thing with newsletters too. There, 90% of the stuff that's out there, everyone's circulating the same exact thing. But the difference being some of them are longer, some of them are shorter. Some of them will give you bulleted summaries. Some of them will give you 3 stories. Some of them will give you 15 stories. Some of them go in the morning, some of them go at night. But whatever fits your particular needs, you're going to find value out there. And there's someone that's going to be out there providing it.
You doing a lot of reading these days? Books?
I'm still sort of old school. I think the big advantage that I've gotten is just going through as many sell-side notes as possible.
Is that what you're doing?
Yeah, as much as everyone likes to crap on, a lot of the sell-side notes that come out, a lot of this is actually incredibly thoughtful. Most of the coverage you hear about when it comes to sell-side notes is being pulled off of page 1 of what might be a 60-page or 120-page research note that has a lot of interesting research behind some of these calls. People spend all day long talking about price targets and a couple of headlines, are you bullish or bearish? And that's it. But sometimes there's like, chart 58 has something really interesting that completely changes how you view the entire world. And that's actually the story. And, I think most of my business is actually sort of based off of, being able to curate some of these interesting insights from these people who do incredible amounts of work. Like these people who work in a lot of these sell-side shops, have been doing this for decades and know the ins and outs of industries more than even people on the industry side. So, one of the reasons why I have the newsletter I have and why I went independent was because it turns out that some of the stuff that I was sharing or my teams were sharing was a little bit better than the other story where the headline is, oh, here's this strategist price target. Well, that same strategist had a really interesting note about the relationship between the VIX and oil prices or something. And here's the thing that really opens your eyes to the world. So yeah, I it's like gold mining, right? Like, you thumb through a couple hundred pages worth of reports, you might get nothing, or you might get, 3 or 4 things that inform, your next newsletter or your next blog post or your next tweet. And then people are going to say, hey, why am I only, everyone's on the distribution list for these notes, but there's some great stuff that seems to be coming out of Sam's newsletter. And so that's why I exist.
No, I love it. What stands out now in current markets that you think people aren't paying enough attention to?
Well, I would probably list off, maybe a dozen things if we were having this conversation like 2 or 3 weeks ago. But everyone seems to be paying attention to everything right now. Whether it is, geopolitical tensions, commodities, interest rates, monetary, all this other stuff. If there is one thing that I think continues to go undercovered, and I write about this, every couple of months, I do continue to think that cyber threats is a big problem, and cybersecurity risks. Here's one of my indicators for why this is important relative to news coverage. If you go through the 10K filings, SEC annual filings for these big publicly traded companies, whether it's healthcare companies or financial services companies, people who do a lot of services, you always see cyber threats relatively high in that list of investment risks, right? They always, because they don't want to get sued for blindsiding investors or whatever. So there's every regulatory filing has these risks of like, this is what you're exposed to when you invest in this company. Cyber is always very high, but it's never covered. We've heard a little bit more about cyber threats coming out of Iran, but I think this is an area that continues to be underappreciated.
And when you mean cyber threats, like, we have times where like Amazon goes down, AWS goes down, so a whole bunch of things break. And like, there's another one where like if it's down, a bunch of things break. Like, how would something that you're describing affect consumers? Kind of similar to that or no?
I mean, so I've looked into, some of this stuff before, and, banks and healthcare companies and, I can't get into too much detail because a lot of these, discussions actually happen off the record because they're so paranoid about how much this stuff gets shared. The good news is, places like hospital systems and banks have incredibly robust cyber firewalls. Some stuff gets hacked, but there's some stuff that's like basically impossible to hack. Every once in a while, a story comes out and they'll tell you that JP Morgan or whoever has 150,000 programmers and engineers on staff to make sure the computer never breaks. Because God forbid, one person at one of these banks loses 1 cent in their checking account, you're gonna have a run on the bank. So that's never gonna happen. So the consumers, I think, are largely safe. But yeah, when AWS or Azure goes down, and this is like just technical side, this is not even cyber risks.
Yeah, shit happens.
Shit happens, but we go out of business. We can't do the podcast. We can't do the YouTube show. I can't send out my newsletter. Like, this is the big problem for people on the business side of things, especially if you're in services. But that doesn't even get into things like, getting hacked and, denial of service attacks and getting information leaked. Fortunately, that hasn't happened on a huge scale, but it's an ever-present threat. And of course, it's never going to show up on these lists of top risks, right? It'll never show up until something bad happens, at which point it's too late.
Sam, share with the folks some of your favorite places to get content outside of Wall Street Research, like easy to find places for anybody, people to follow on Twitter. What do you think?
I'm still a big fan. It's funny. We started by talking about this tension between traditional media and the digital upstarts. I'm still a big fan of a lot of the morning newsletters coming out from the traditional players, and you can get almost all of this stuff for free. The Bloomberg morning newsletters, everyone has to sign up for those things.
Really? Bloomberg morning newsletters?
Bloomberg morning newsletters. Wall Street Journal has a Markets AM newsletter written by Spencer Jacob that always has
Spencer Jacob. That's the second time that guy gets mentioned this week because he was giving
Really?
technical analysis some love earlier this week.
Yeah, he's this guy.
I don't
has
know this
so
guy,
much-
but I think I need to meet him.
he has so much range. You know, bring him onto the show. He's got so
Dude.
much range. Always has an
How
interesting
often-
thing every morning.
Listen, Sam, you read the Wall Street Journal. How many times the Wall Street Journal given technical analysis love?
Not a lot. Not a lot. I mean,
Spencer
I'm
Jacob,
big,
shout out. Shout out.
yeah. You know, because listen, it's markets, right? And like, listen, even me, you know, the CFA fundamental analysis guy. But you know, back when I was at Forbes, you know, I worked on 2 newsletters. One was about fundamental analysis. One was about momentum that actually had, you know, leaned into the technicals a little bit more. And I'll tell you one thing: if there's one thing that's absolutely real, believe it or not, momentum is a thing. There's no denying it. You can say whatever you want about, you know, all the different metrics and stuff, you know, both on the fundamental and technical side. One thing that's true, and you know, whether you like it or not, momentum is a thing. Price momentum is a thing. Earnings momentum is a thing, believe it or not. So yeah, you know, love to those guys to be able to have that kind of range. But yeah, Spencer Jacob, Wall Street Journal AM. Of course, you got to be reading Ticker on Sundays.
Gotta be
you know,
reading Ticker on Sundays.
I get a lot of love from people who don't actually care for things like macro and fundamentals, but they read Ticker on Sunday mornings because, you know, like, because every week I do that roundup of, you know, here are the 15 economic indicators from the past week. You can thumb through, you know, 15, 20 charts in 30 seconds, and that's your entire macro diet for the week, and you can go back to doing whatever else it is that you're doing. But yeah, you know, again, like I said before, everyone has something different in terms of their schedule and their timing and their diet. But yeah, here's what I recommend to people: go to every channel you can think of, whether, you know, CNBC, Fox Business, Business Insider, Axios, whatever. Sign up for all of their morning newsletters. Give yourself a week, thumb through everything. There are going to be some things you like, some things you don't like. Unsubscribe, and then stick to a couple that makes sense for you.
Listen, Sam's been doing this for a long time, guys, and he's still at it better than ever. Looking good, buddy. Looking good.
Thank you. You look great, man.
Thank you. Where are we eating good Korean food in New York City these days?
All right. This is very, 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 very important for anyone visiting New York or in New York, frankly. Listen, everyone, you know, Korean food has been a big thing recently, whether it's Korean chicken wings or barbecue or soju. People, K-pop, all that stuff. People have figured this out. Something that continues to fly under the radar is if you go to K-Town, especially K-Town in New York, everyone gravitates toward those restaurants, you know, at the ground level. If you look up one story, the second floor of every building on 32nd Street has a karaoke bar, a store, or, you know, even a dive bar, and that's where the real gems are. In Korea, these dive bars are called pochas, Pocha. Every other, you know, building on 32nd Street has a pocha on the second floor. You take the stairs up, you're going to be able to get Korean drinks, Korean liquor, beer, soju. And importantly, you get basically everything else you get on the Korean restaurant menu, but it's cheaper, it's louder, it's more casual and laid back. That's what we're going to do next, JC. The next time you're in town, we're going to get some people. We're going to go to Pocha. It's going to feel like a hole in the wall. It's going to be the best thing that you're going to experience in K-Town.
You've never steered me wrong. Sam Rowe, we just dropped the link to Sam's newsletter, Ticker. Check it out. Sam, you're the man. Appreciate this a lot.
Thanks for having me on, man.
Adios. Dude, come on. Sam Rowe. OG. Spencer, big fan of Sam Rowe.
Big fan. Also, by the way, shameless plug. You should read our newsletters too. Most of them, some of them even go out in the morning. Some don't, but some do. So there's the link on the screen. We've got a dozen different newsletters, some of which go out at 5 a.m. Others go out whenever they go out, right? Sean, Riley, Strazza, right? They're all writing all the time. So you should get our newsletters too. There we go. All right, that was great. It is 9. Oh my God, 9:32. Time flies when you're having fun.
Man,
Can
just
we-
reminiscing about the old days with Sam. Did I bore you guys?
No, you didn't bore me. I thought about jumping in there, but it was a good conversation. When you asked Sam what like the heyday of blogs was, I was in my head. I was like, oh yeah, like 2013. And Sam was like, nope, that was the end of the heyday of blogs.
Right.
So I'm a little younger than you guys. Real fast before we go, I don't know if we have a chart of Adobe, but this is why we do the beat report, right? Because it's not about the numbers, it's about the reaction to said number. The reaction this morning is not, and last night for that matter, was not good. So the numbers compared to estimates were fine, right? They beat on the top line, they beat on the bottom line, but what do you know? The CEO, the longtime CEO, is stepping down. The stock is down 5.5% this morning, although it is off the. It kind of opened at the low there, so it's popped at the open.
Salesforce acting well this morning.
Right. So my point in saying all of this is the reaction today will tell us what we need to know going forward. It's why we it's why we weigh the reaction more than we weigh things like the actual estimates and the numbers, because it's all part of the same equation. Can't look at one without the other. All right, I wanted to mention Adobe because it was the big one last night, kind of one of the big movers this morning. Just kind of watching here. There's not much else on my list. I did want to mention, by the way, if you did not catch the live event that JC and Strazza did at the close yesterday, Strazza kind of talked through how he finds what he called fast money charts. The link is in, it's on the screen. Let me throw it up. It is in the chat as well. Let me throw it up there again. But the link is right there.
That was fun last night. It was the first time Strazza and I did that in a couple of weeks.
It was the first time you and Strazza did that publicly in a couple of months, actually.
True.
It had been
the Charge Summit.
Since Charge Summit. So check out the replay. Basically the idea here is actionable information, right? It's the charts are great, but charts by themselves don't make you money. You have to translate that to actual trades. That's what Strazza does, by the way, all day. The guy is looking at charts and then using the charts to put on a trade that will then make money. He went through all of that yesterday with JC. So the link is
doing it right now, actually.
Just doing it right now. That's why he's not here with us, because
he's buying calls in the stock I just talked about.
All right. He's doing things. We have to go do
that trade, Straz. I like it. A lot of strength there.
Well, let's go put some money to work. Everyone, have a great rest of your day. Don't forget Fridays.
Come on, you got to see this. You got to see this. Look.
Oh, that's interesting.
My daughter came home with this the other day. This is a Taylor Swift, Kelsey wedding sticker book. And you can take the stickers. See this?
I don't know whether to be like impressed or like horrified.
I'm like, I need to borrow this for the morning show because they're not going to believe me. This is a Taylor Swift, Kelsey wedding sticker book. Are you kidding me? Anyway, I had to show you guys.
That's great.
That was crazy. I'm like, is that what I think it is?
All right, my recess will be, I'm going to try to recommend like something that I read recently more often, because I don't read a lot of books these days, but I do read a lot of like longer form stuff. A great article in the Atlantic magazine yesterday, My Year as a Degenerate Gambler, or Degenerate Sports Bettor. I forget exactly. I don't have the link handy, but if you just search My Year as a Degenerate, it'll come up. Basically this guy, chronicled what it was like to, and this Mormon writer chronicled what it was like to fall into the world of sports betting for a year. It was just really interesting stuff. As someone that is like a social sports bettor and doesn't really do it very often, kind of wild. So I want to mention that. 5 o'clock on Fridays, Larry Thompson goes live, Thompson's 2 cents. So that's today on the channel. We'll see you there. Everyone have a great rest of your day. Have a great weekend. Go make some money, and we'll see you on Monday. All right. And actually, you'll know who our Monday guest is.
Who?
The one and only Michael Batnick.
Ooh, Batnick coming on to the show. I like it.
That's what we got. All right. Adios, guys.
Later. Boom, boom.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go